So the next question on Instagram says, I'm in the Chicago northwest suburbs with 2 SFRs. I'm hesitant to add more in Illinois.
Okay, you might be right. We'll see what the data tells us. So you said the northwest suburbs. Again, I'm on the renterswarehouse.com property search here. These are all the listings you find on Zillow, but they're analyzed through the prism of investment quality. So if I assume we're talking about up here, a couple of things about Chicago. Number one, the prices are getting higher, but it's still of the top 3 cities in America, the one you can generate a positive cash flow, but it's becoming more and more and more landlord unfriendly. Just like California, just like New York and New Jersey, they're just becoming landlord unfriendly. So they've got a lot of regulation and cost associated with that regulation. For example, you have a rental home here, and a lot of these places you have to go and register it with the town. You pay a registration fee. Anytime a tenant moves in, you have to have it inspected prior. You have to pay an inspection fee. It causes delays of you being able to get it cash flowing. And then there are regulators who look at those inspections and start telling you what you can and can't do. Like, it's America. If you want to have a beat up rental property, you're supposed to be allowed to have a beat up rental property, and then your rent is going to be reflected by the fact that the condition is not good. Chicago and a lot of places like it decide, well, no, we want to protect the tenants. Well, the tenants don't have to rent the place. They can go rent something better if they don't want to. But that makes me nervous in Illinois. Any place that is decidedly anti-business, and they make a lot of decisions, and it's really happening a lot nowadays, where they're making a lot of decisions that it's just an investor unfriendly community. All right. So I personally wouldn't invest in Chicago, but it is worthwhile to take a look at. Let's just find a house here somewhere. We got a lot of things in the cities. So here's a typical property up that way. We'll look at some of the market data real quick to see. So here you can see that Chicago had a boom and had a bust. It recovered. That looks pretty solid. Look at the seasonality, though. This is always so interesting. Here is the median price, or the average price, I should say, in July. Here's the average price in February. July, February, July, February. All right, that's the seasonality. That's the reason why we don't smooth these charts out and adjust for seasonality, because I want you to know that as an investor, you've got less competitors buying properties in the fourth quarter. So you're going to get a price. The reason why the prices are lower in the fourth quarter is that, you know, these are properties that closed in February. That means they went into contract in December, right? So people who are buying houses during the holiday season, there's less competition, less demand out there, right? And the owners that want to sell, don't have to sell, are going to wait until spring. The owners that have to sell are going to take whatever they can get in December, and that's why you wind up getting a better price, not because cheaper houses sell and not because houses become less valuable, but the houses that do sell are sold by sellers that don't have the option to wait. So you're in a situation where there is supply that needs the demand, and there's less demand. You wind up getting a better deal. But population change is wacky in this place. I mean, there's 5 million people, so this is scaled kind of strangely, but I don't love this trend right here. Since 2013, population in that county has been going down, all right? And the price appreciation overall is 2% over the last 20 years. That's not great, all right? So for the reasons of the market's performing okay, but not as good as it could, and because it's becoming less friendly to landlords, I'd say let's get out of here. And what was the other place? We're thinking about Kenosha, Wisconsin? Is that what you said?
Kenosha County.
Kenosha County. So Kenosha, Wisconsin. All right, I know nothing about Kenosha, Wisconsin, so let's learn about this together, all right? First of all, I'm on a lake. Which one? I hate to be such a New Yorker and not know, but okay. So I'm south of Milwaukee, all right? So Milwaukee is a major metro, and I'm in the outskirts of it. I always like that. I like being in a place that's near a major metro. Look at the prices of the houses here. All right, so I've got houses in the ranging. Here's a $130,000 house. Here's a beautiful 225. Let's look at that one. All right, the financials on this shows that the monthly rent on this property is going to be $1,460. That may or may not be accurate, but it shows that we've got fairly high taxes and a relatively low yield. But again, these are all things that you got to get in touch with one of our people to verify it for you, because these are robotic estimates of rent. and you got to have it dialed in by a good person. So this is a place where you speak to an advisor at Renters Warehouse. They tell you that robot's wrong. This should be 17 or 1650 in rent, and now the yield starts to look a little better, right? But the key point here is going over to the market data. So this is interesting. The green line is the county, Kenosha County. You can see that it tracked with the country, which is the blue line. The country got steeper. It was this anomaly right here that I don't believe. Whenever I see a number like that, something confuses me there. There are reasons that I won't bore you with why something like that might exist, but what you're really looking at, that average is smoothed out to where the average price has gone from under 100 to 175 over 20 years. So that averages out to a 3.53% 20-year average for the county, which is substantially higher than the 2.61 for the state of Wisconsin, and is pretty close to the national average. Okay, with a little bit less volatility. All right, and I always like looking at population change, which is the big picture. Population change is solid. It's pretty much tracking with the state. All right, so I don't know enough about Kenosha. This is where I would say you need to have a local advisor to help you. So I guess my answer is I like the prices. I like the location. I like the fact that it's performed fairly well over time. I don't know enough about the market, and I would definitely contact a renter estate advisor at Renters Warehouse to help you understand those fundamentals even more. But if I was going to make a choice right now, Kenosha over Chicago, I'd go with Kenosha.